we've had a very dry run on listings, especially during the COVID, and we're looking for more listings and make the market more, I suppose, vibrant. And they think that SPACs, introduction of SPACs into the market would actually offer, the framework would offer companies with an alternative capital fundraising route with greater certainty on price and fundraising and execution. So they want investors to have a diversity of investments, and SPACs provides that diversity. And they think that we could be the leading market for SPACs in Asia. Of course, as an investor body, we've been very concerned about the risks, and we've been having discussions with SGX, lengthy discussions with the SGX, and they've taken into account our suggestions. And okay, let's see how it goes. We have to educate the investors. We got to get them prepared, and we are ready.
Yeah, it's interesting you bring that up, Ari, risks, because sometimes the analysis or criticism lobbied at SPACs is with this reverse merger model that has this sort of timeline for a listing to happen. There is slightly less regulation. Do you think that there is enough research and regulation here in Singapore to allow this kind of listing to go ahead safely?
It's new, and we've got to tackle it as it comes. We've got to look, SIAS has been appointed to be the independent body to, get research on SPACs, both at the time of listing as well as ex-SPACs. So de-SPACs. So we will be doing that, appointing independent research houses to come up with research, and we will be guiding them. And we will be looking at that very carefully. As you know, it's really the sponsors that matters at the time of listing. They're coming with money, and they've got to disclose their plans, and we've got to look at who they are and what is their track record. And we've got to do it well, because the retail investors are usually not savvy on this sort of instruments, which has been in the domain of private equity. So now we are opening it to retail investors. So SIS has got a very strong role to play in ensuring that they understand what they're going to invest in, and they have a good feel about the SPACs they are considering. It's going to come in fast, and I think there's going to be a lot of easy way and faster way to raise funds for companies, and I think it's got to be our role to guide the retail investors and hold their hands.
And as you mentioned before, Singapore is a destination for real estate investment trust. That's what it's known for. But do you think with this SPAC opportunity that's being explored, it's all about getting tech here to big tech listings?
Well, we hope so. We hope so. Australia, United States, or maybe Hong Kong, in view of valuations, they have been preferred. We are starting SPACs, and it's got to be some time before we can have the peer group, comparisons. And it's going to be a task but I'm sure as time passes by, people get used to. And if the market is receptive, we can get the tech companies looking at Singapore seriously, because we've got a fairly regulated, regulations are in place, and investors are always looking for new avenues and new, ideas. But we got to caution them, and we got to teach them on what the risks are, and hope that they will understand what they're getting into.